Hello again, fellow BeachBum traders. Thank you for joining us for our weekly trading game plan for the first week of May 2023, May 1st through May 5th of 2023, where we'll try to see, is it one more and done for the Fed, or will we get future subsequent rate hikes, or what? So again, we'll have the Fed decision this upcoming Wednesday, and we will decide, is it one more and done for the Fed, or again, can we expect future rate hikes as well? So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for this week. These Google documents with our notes for our weekly trading game plans are publicly accessible. You should be able to find a link to this Google document in the description box below. We store these Google documents with our notes for our weekly trading game plans in a publicly accessible Google Drive folder, which you can also find a link to in the description box below. Our notes contain links to bonus videos, all the tools and resources we use to do our market analysis, etc., for our weekly trading game plan. So again, you can find the links to both these notes and past notes in the description box below. So we'll get started by looking at the homepage of Finviz, see how the markets ended up on Friday. So we can see all of the indices ran up through the day, all ended up positive for the day. Approximately, the Dow and Nasdaq or S&P were closer to 1%, the Nasdaq about 0.7%. So all of the indices ended positive. We had many more advancers to decliners, 70% advancers. We had a balance of new highs and new lows, about 51, 49%. We've now got 45, 46% above their 50-day moving average, 54 below. So we're still a little weak relative to the 50-day moving average. And we have further weakness relative to the 200-day. We're 44% above, 56% below. And this indicator is showing a little bit of bearishness. So even though the markets ended up, we're seeing a little bit of bearishness towards the end of the day. Welcome to Ricky Khan, Ali in the Bay. Thank you for joining us in the chat. Glad to see you all. So we see in the heat map, almost everything was in the green. We have a few standouts. Amazon is quite negative, although they beat on their earnings. Their guidance in terms of their cloud business was pretty negative, so it took about a 4% hit on Friday. We see Tesla rebounded. We also see Google had a slight decline. So here's the recent news. You see someone saying how the Fed could cause the stock market crash and how to play it safe. So again, the focus is going to be on this Fed decision and particularly their guidance. What do they say? What does Powell say in terms of his press conference? And again, we'll talk about that throughout this video. FDICs, we'll talk about FRC and the potential takeover of FRC before the end of the weekend. We can see last bids for FRC were announced for Friday. Again, my expectations, just my opinion, I think FRC is going to be taken over this weekend and will be gone by Monday morning. So again, my opinion. We see strong earnings, so we're still in the middle of earnings season, and we see earnings have generally been beating. We see oil broke down below 80. It's been bouncing off 75. We'll see that in the futures. Been pretty range bound right now between 75 and 80. Natural gas, again, we'll see in the futures, been pretty much range bound between 2 and 3. Gold's been pretty steady, oscillating around 2,000. And we can see the futures for the indices are all pointing up right now. We also will see the dollar's been pretty much hovering around the DXYs around 100, 101 or so. So we just see some oscillation in the currencies. And we saw a decline in the Treasury yields. Part of that may be a risk-off move. And we should see those yields increase as the Fed interest rate gets hiked this week, and you can still see the curves significantly inverted. And again, we'll see all that in the futures as well. Welcome, Easy Mike, MD, Walter Lyons. Thank you all for joining us. Glad to see you. Hope you're doing well. So we'll look at each of the indices quickly, the SPY, see where we're at. So we see it finally broke out a little bit of that upper trend line. We see we're still in a declining channel, a narrowing wedge. We did have a pretty good breakout the past couple days. So we'll see if it holds above that trend line, and if so, it'll provide support. See on a weekly, we got a pretty good hammer, pretty bullish candle after that doji. So last week we had the doji, now we've got the hammer. So bullish signs on the S&P. It's above both of its moving averages. I would expect it to test the recent high, and that recent high is going to provide some level of resistance. So we'll see how it handles, if it can break out from that most recent high, or if we're going to oscillate back down towards the most recent low. Look at the NASDAQ, the Qs. Very similar. We had a doji. Now we've got kind of a hammer. It's levitating significantly above its weekly moving averages. It looks like we're getting a golden cross on the moving averages from a weekly standpoint. Again, very bullish signs. We've got a recent high over here. And again, I would kind of expect, unless we get some unexpected news, where the FRC thing's probably going to give us a little bit of a shock on Monday, but I think it's pretty well expected that eventually FRC is going to end up in FDIC receivership. And so I don't think that's going to be a major shock. The question is, are there other banks that are then at risk? And again, the banks are such a small portion of the indices that it's more just of a fear thing than any major impact to the indices. So again, all of our content should not be considered financial advice. We're not financial advisors. This is for education and entertainment purposes only. So again, my opinions in all of our content. We'll look at the Dow again. All the indices look very similar. Again, the Dow's had a doji, got a hammer, very bullish, levitating above its moving average. Got support from the near-term moving average, and again, we see that it's probably going to go up and test the recent highs, which is going to provide resistance, and we'll have to see. Again, as I've been talking for several weeks, I don't expect a major breakout. I just don't think there's the volume. I think we've still got money flowing out into treasuries, money markets, etc., and there aren't a lot of inflows into the markets. And now we're in May, so there's that old adage. We'll talk about that in the strategy section as well. Sell in May and go away. So I think that selling pressure is going to keep us range bound and not breaking up to new highs in any of these indices anytime soon. Again, unless we get some marvelous news, which again I don't foresee. Look at the VIX. This is the VIX futures, so it's showing around 18. The actual VIX itself, I think, is sitting in the 16s. I saw a news item that said it was at a 18-month low. So again, none of these events, the GD or the economic data that we'll see, even though it wasn't all that great, the market's just shrugging everything off. It wants to go up. And it's so the volatility has been steadily decreasing for some time. Again, there might be some volatility around the FRC event. There might be some volatility around the Fed interest rate decision. I'll give you my expectations when we talk about that. I don't expect any shocks coming out of the Fed interest rate hike decision or Powell's commentary. We'll get some volatility heading into that and around that event, but I don't expect any major surprises. So no major pops in volatility. We'll look at the IWM, the Russell. It's kind of been underperforming, which again is not surprising given, small caps. A lot of these guys don't make money. They're not as recession proof. They're not as resilient with rising interest rates, again, capital or credit crunch issues, etc. So the IWM's been, underperforming. Again, it's not as bullish of a candle. It's under its moving averages. Again, much more bearish signals on the IWM for the Russell and for small caps. So let me grab a quick drink and we'll look at the sectors and industries. We'll look at sector rotation issues. Let me see what's going on in the chat. Okay, again, we'll look at the groups, the sectors, etc. So we see Friday, almost everything was in the green except for utilities. Utilities is a defensive play, risk off. It was, more of a risk on. We're seeing a rotation back into energy and real estate. Real estate's been steadily recovering the past couple days, as is basic materials, healthcare, and again, the defensive sectors were the least positive on Friday. For the week, again, technology, real estate, that's probably one of the mega cap techs, probably Facebook, Meta. Again, so the defensives, utilities, healthcare, financials were negative for the week. So again, we're seeing this steady improvement, particularly in real estate. I think we're going to see basic materials continue to move up the chain. So again, for the month, we see basic materials is down near the bottom. We see real estate's moving up the chain, energy's moving up the chain. So again, these are the sectors I expect to continue to move up. I think the defensives are going to continue to move down. Technologies, very volatile. It just bounces up and down based on sentiment, based on mostly the mega cap techs. Look at the industries from Friday. So we saw a recovery in uranium. We've been talking about the sector rotation in and out of uranium. Tomorrow we'll talk about several stocks that we're using to play this sector rotation in uranium. We also see some oil and gas, also sector rotation in and out of aluminum. We also see several REITs are starting to move up the chain. So again, the recovery in real estate. We see the underperformers. We saw gold on Friday oscillated down. So again, it's been just sitting around 2,000 right now. Solar took a big hit. I think that sector rotation into solar is done. First Solar had very poor earnings, negative news, etc. I think solar is probably done for now. I think there's some opportunity again in some of the basic materials. We'll talk about steel, silver, also coal. We've seen rotations in and out of, and we'll talk about tomorrow how we're playing that. So again, for the week, see uranium's recovered, sector rotation into uranium, into real estate. Again, aluminum, it rotates in and out. Utilities are negative. And again, we'll talk about this potential rotation with steel. Copper's negative. Also, we're going to talk about this rotation and our what we see as opportunities in the sector rotation of some of the coals. And again, I think solar's done. Again, we see aluminum and coal near the bottom. So I think there's an opportunity with coal. I'm not so sure about aluminum. So we'll see semiconductors we see is now negative for the month. And we saw SOX all decline, SOX S run up. So again, I think that that trend is probably done as well. Although somebody in the chat pointed out AMD's got earnings. So that may provide some near-term volatility. Somebody mentioned end phase as well from a solar. Okay, so let's talk about the economic data from last week. I'll bring up the whole calendar, and then I'll talk about some of the highlights that I took note of. Again, notably on Thursday, we got continuing jobless claims. We see they're a little bit lower than expected. We got PCE prices, which is an inflationary measure, was higher than expected. So inflation is still high and sticky. I think that's going to be a major input into the Fed interest rate decision. Again, I won't tip my hand yet as to what I think that decision will be, but again, I think inflation's still high, and so that's their major battle. The GDP number came in way below expectations. It's still positive, so it says as of Q1, we weren't in a recession yet, but we could see that downtrend in GDP. In my humble opinion, again, I think this is a indication as that we're headed into a recession. But again, technically, we need to get 2 quarters of negative GDP to technically be considered in a recession, and Q1 was positive. So it wouldn't be till after Q3 that the organization that announces that we're in a recession could come out and say, yeah, technically we're in a recession, although we already could be in one from a GDP economic standpoint. Also, we saw initial jobless claims was lower than expected. So again, the job market is still resilient. The Fed doesn't have to worry about the job market. They don't care about GDP. That's not one of their mandates. They can drive us into recession. That's not one of their mandates to keep GDP above zero or whatever. It's to full employment and to keep price stability, which means inflation, and they're still holding firm to their 2% inflation target. So they're going to raise rates. Again, we see this core PCE was higher than expected. So again, all inflation measures are still high, still higher than expected. It is coming down slowly, but again, much higher than expected, coming down slower than I'm sure the Fed would like. We see employment cost index was higher than expected. So wage, the potential for a wage price spiral. Wages are still too high, and we'll see if Powell specifically calls those things out. I wouldn't be at all surprised. Personal spending was higher than expected, so the consumer's still spending. So, and income was high. So, again, the consumer's still out there spending money. Inflation's still going up. The job market's still relatively resilient. So the Fed doesn't really have to worry about that in terms of raising rates. So let's look at some of the other economic data from last week. I'll zoom that in a little bit. So hopefully that's pretty legible. Let's see if I go, there we go. We'll go one more up. We got building permits is negative, but not as bad as feared. Housing index, housing price index was higher than expected. So housing costs are still high. Again, inflation. New home sales was very positive. I'm assuming that's because the 10-year Treasury dipped and mortgage rates probably dipped a bit. So anyone wanting to buy a home is probably pouncing on that opportunity before the rates go up again. Crude oil stock, very much more negative than expected, but the price still declined down to around 75. So yeah, mortgage rates, they're up a little bit. So applications was positive week on week. So again, I think the last people that want to get a home are jumping on that opportunity. Core durable orders was much more positive than expected. So again, the economy is still pretty resilient right now. So again, not a lot of worries there. Okay, oil inventories down. Again, I don't think the price is following these numbers very, very much. I've been saying that for a while. Talked about jobless claims and GDP. Pending home sales is way down. So again, people aren't looking at buying going into the future. Natural gas storage was up much more than expected, but again, it didn't impact the price a whole lot. It's just kind of hovering between 2 and 3. Again, we talked about core PC. Let me talk about Michigan sentiment. So the 5-year inflation expectations went up. So inflation, the consumers expecting inflation to be higher and stickier than 2%. Expectations went down, so negative sentiment, but still relatively positive. Current conditions improved. And again, current inflation expectations was in line, but at 4.6%. oil rig count was pretty much in line. So we'll look at the overall calendar for next week. So we've got manufacturing PMI, ISM. So both of those are inputs to the Fed's decision. I would expect them, to be pretty much in line to what we've seen. I don't expect any major surprises. Factory orders, jolts. These are open jobs. Powell commented on this in the past. So we'll see if the jobs, if they're closing open jobs. We've seen all the layoffs with all the tech firms. Now it's been all the waves of the consulting firms, even the mega caps, Amazon, etc. Even Walmart, laying off, waves of layoffs, and it's now getting, into the high-end professional services sector. Mortgages, again, ISM, PMI data. And then on Wednesday, we get the FOMC decision at 2 o'clock. So they'll come out at 2 o'clock, release their statement. We'll hear the written comments. They'll come out with their decision, you can see, and we'll look at specifically the probabilities in the Fed Watch tool, etc., what the probabilities of a 0.25 increase is going to be. And then Powell will come out at 2:30 and have his press conference. So take a note of all of these events. I think what Powell says is probably going to be more important than the actual, interest rate increase, unless it comes out different from expectations. The question again is, are they one more and done? So are they going to do one more rate hike, and then is he going to comment that they're going to pause and look at the data and wait to see what the impact of their current rate hikes has been on the job market, on inflation, on the economy before they continue with potentially raising rates further, or are they just going to continue raising rates until they get to their 2% period? So on Thursday, we get jobless claims. And Friday, we get some earnings and then payroll. So this is after the last decision. So this would be input then into the next Fed decision. And, it could cause some volatility again on Friday. Still in the middle of earnings. So you can see the whole earnings calendar here in investing.com. Again, I won't go through this in detail, but you can find any companies you're interested in, you're currently holding, same sector, might impact something you're looking at buying. We've got Lowe's, we got retail. So again, still a lot of earnings. Earnings matter significantly. And again, as we saw with Amazon, it's not just whether they're beating on their earnings, it's what do they say in their conference call? What's the guidance going forward? Again, the market's a forward-looking mechanism, forward-looking market. So it's more concerned as to, okay, how's the business going to be going forward? Then how did they do the past quarter? So if they beat, that's positive, but if they give poor guidance going forward, then that's going to negatively impact their stock price going forward. So again, I'll let tons of earnings, so I'll let you go through this and see those of interest to you. There's AMD is on Tuesday, so tech, semiconductors, Pfizer, so biotech, pharmaceuticals, Uber, Marriott, so a wide variety of earnings. Yeah, Easy Mike's commenting about the news with the Iranians. Well, I guess first we diverted an Iranian tanker that was headed for Texas, or it was headed for China. So we diverted that, given the sanctions, the nuclear sanctions on Iran, and essentially in retaliation, they seized a U.S. tanker that was headed for Texas. So again, more volatility, potential volatility in oil, but again, I think it's going to be pretty range bound between 70 and 80. Right now, it's 75 to 80, and we'll see that in the futures in a second. So again, the big news this week is going to be the Fed decision. Going into that, I think the markets are going to be hesitant, somewhat muted, until we get to Wednesday, and then what do they decide and what do they say going forward. Also, you can see in our Discord, we have a channel, an earnings reports channel in our Discord. Our Discord's free to join. You can find a link, an invite in the description box below, and I'll throw that up in the banner as well. Again, it's free to join our Discord, and the earnings as they come out, they get automatically posted in the earnings report channel in our Discord. So a great way to get near real-time access to those earnings reports. So again, join our Discord. You can get the earnings reports very quickly. Okay, we'll look at the market screen in Webull. Let me grab a drink a second. I'll throw up the Webull ad, and I'll put our link up in the banner. So we'd appreciate your support if you're not already using Webull. Again, it's our preferred platform for trading. We do market analysis, due diligence, etc. in Webull, and you can get up to 12 free stocks. Also, we pointed out last week that they're offering an initial 5.8% on idle cash via their cash management offering. So if you're not already using Webull, you can get up to 12 free stocks. Worth $3,000 to $3,000 each. Plus, you can get up to 5.8% on your idle cash, so which is better than a bank account or a CD or even most of the treasuries right now. So. Okay, so Friday we see we had 2-to-1 advancers to decliners. Majority of the advancers was relatively small, as were the most of the decliners, with a few outliers. See the net inflow. Again, we still see the NYSE is outperforming. Still got inflows in the NYSE and outflows in the Nasdaq. So even though some of the mega cap techs, etc., there's a net negative outflow of cash from the Nasdaq. So I think that's important to note. Again, you can see the near-term earnings calendar here in the calendar tab. Again, I'm on the market screen of the online browser version of Webull, and you can see we have videos about how to use this market screen, etc. But again, you can see the upcoming earnings here and whether they're during market, after market close, or before market open. Again, what's upcoming in the near term. So let's look at the best performing industries for the week. Yeah, we talked about the rotation back into uranium. We can see some of the top performing stocks. We'll look at tomorrow. We'll indirectly talk about CCJ. We'll talk about DNN. We'll also talk about some other uranium stocks tomorrow. See, the others are pretty split. Food and tobacco kind of split. Household goods split. Construction. So everything looks kind of split, some positives, negatives, probably based on earnings. Hasbro had a big run. They're doing a deal with Mattel, had positive earnings. Transports, not too bad. Home building, the home builders aren't doing too bad because nobody else is selling. We talked about that. Look at ETFs. We'll look at the markets. So mid caps positive, mid caps, S&P up, small caps up, Dow up, again mid caps, S&P up, VIX down. So again, the SPXY is a short on the VIX, yen up, Bitcoin short, small cap bull up on the Russell, up on China, up on Europe. So uranium was the top performers. Natural gas positive, transports, energy. So industrials were generally positive, environmental transport. Some healthcare, XBI. So that's the S&P 500 biotech index was positive. Utilities negative, communication services, natural gas, oil, semiconductors, this was positive. SMH positive. Again, uranium, timber, consumer cyclicals was positive, and defensives, food and beverage, consumer staples. Again, we saw the recovery in real estate, core REITs, short-term REITs, residential. The regional bank thing's been very volatile. Again, that's going to get hit with the KRE takeover or the FRC takeover. Carbon, oil, all positive. Let's see what the bonds are doing. 25-year, 20, so very long durations positive. So we should see some normalization of the yield curve and bonds. So let's go and look at the futures. So I think it's clearer in the futures than in the indices. See how we're testing the highs, the previous highs on each of the indices. So we'll see. Again, I don't expect a breakout. I think they'll probably get rejected from the previous high, but I think they'll run up and test the previous highs. So again, probably get rejected. They'll have to. That's going to be a resistance point. We see they've had an exuberant run up. And they're going to run into that resistance and again probably get rejected, probably correct, probably retrace, and then we'll have to see if we continue in this range bound flat environment that we've been in for quite some time. And again, not financial advice, but that's kind of what I'd expect is we run up into that previous high and get rejected, retrace, and then probably revert back to this pretty flat range bound behavior. Again, that's my opinion. Same thing with the Russell's got a lot more to run up and test that previous drop and then the previous high. So again, the Russell's got more room to run, but again, it's under a lot of pressure. See the major decline in the VIX. Again, I think we'll perk back up a little bit, just given the Fed decision. Again, we see oil has been pretty much range bound. Right now, it filled that gap down to 75, which it needed to do, bounce back up. But it's probably range bound between about 75 and 80, low 80s, near term, and then longer term between 70 and 80. So I don't expect significant moves in oil or natural gas anytime soon. But if you want to play these shorter term swings, you can do that. Again, natural gas pretty much range bound between 2. We see it bounced off at 2, ran up a little bit, gapped up, came back down. The previous high point is 3. So again, just like oil, I expect we're going to be pretty range bound between 2 and 3. We'll have these oscillations back and forth. The low on natural gas is like 175 or so. I probably, and I think I mentioned this, I probably should have added a position in oil at that tweezer bottom on at 2, and may do that if that occurs again. Again, gold's been pretty flat, oscillating around 2,000. Again, unless we might get some additional push from the FRC failure. We'll see. But it needs some kind of push to get it back up over 2,000 and to continue upward. Same thing with silver. Been pretty steady around 25. It's got further upside to 30, but otherwise just been oscillating around 25. Saw a pretty big drop in copper. Looks like it rebounded a little bit. Again, recessionary issues, probably primarily. Platinum ran up and it's rolling over. Palladium ran up and rolled over. So a drop off in several of these agricultural products, corn, oats, soybeans. And I was looking for opportunities with ETFs to play some of these, but the risk reward, I haven't found one. Even wheat, I haven't found a real good risk reward yet to play those drop offs in some of those agricultural commodities. Sugar ran way up, lumber's coming back down. And then again, we see the bonds. They had run up, came back down, now they bounced back up. So again, the yields have been, they've been pretty oscillating, pretty steady here. Again, we're going to see the interest rates go up, so that's going to drive prices down. We'll have to see if these previous support levels on the bonds holds or if the prices drop, because again, the yields really need to be up in the 4s, and they've been down in the mid 3s lately. Again, the dollar's been pretty, steady around 101 lately. It'll bounce up. There's resistance at 102. We see that got rejected pretty heavily and came back down. So again, it's just been kind of oscillating between 100 and 102. The pivot points around 101, I think. See, the yen had a pretty steady drop off. I think they talked that they're not going to lighten their controls further. Yeah, see, Walter's talking about natural gas. Yeah, like I said, I probably should have put an additional short-term swing scalp position in on oil at 2 when natural gas hit 2, but I missed that one. That wouldn't be bad for a shorter term. Again, I think it's gonna oscillate between 2 and 3 right now, is my humble opinion. So I'm not overly excited about adding longer term positions. Okay, just another quick reminder in terms of news, etc. We also have an automatic feed in our Surf the Market Reports channel in our Discord. Again, our Discord's free to join. In addition, so as news comes out, you can see this recent news about the FDIC asking the big banks for their final bids due on Sunday. So either JP Morgan, PNC, or one of the big banks could buy FRC, or the FDIC is probably going to take it. I expect by Monday morning, FRC will be gone. I also post, so we can see all the news items, articles, etc., interpretations of the economic news. I also post the notable news from investing.com and those stats in the Surf the Markets channel. So again, join our Discord. Again, you can get all those news items, the economic data, as quickly as it comes out in our Discord. Okay, so let's talk about our strategies. We've got all this data. We know the Fed decision's coming up. Let's see what do we expect? Do we expect one more done for the Fed, or are we going to get continuing rate hikes, or what? So I've included the links to the couple of tools we use to monitor the expectation, the probabilities of FOMC rate hikes. I added these here in the notes. We're also releasing some previous videos, some videos on how to use these tools. So you can see these videos on how to use the FedWatch tool we just released via the link or on our BeachBum Trading YouTube channel. And there's a bonus link to how to use the Fed Rate Monitor tool. And both of these can be found in the reference links under the links on our homepage. And I've got a link to there as well. So you can also find these tools as well as many of the other tools that we use in the link section on our homepage, beachbumtrading.com. So again, it's a quick place to find links to all our trading platforms, all our social media sites, invite to our Discord, etc., as well as again all the resources we use to do analysis, etc., in one quick place. So I'll bring up the FedWatch tool. Let's see what they say. So one of the nice things is here's a countdown. Let me grab a drink a second. Okay, so again, on the FedWatch tool, we can see a countdown to the next Fed decision, 4 days, 3 hours. We could see the probability for a May hike. So we've got 16% of no hike, and we've got a 84% chance of a 25 basis point hike to bring the rates up to 5 to 5.25. Again, you can see what the probabilities are for future rate hikes as well here. So let's see if they're thinking that it's going to be a one more and done. So right now for June, there's essentially 62% will still be at 5 to 5.25. There's 11% chance of a drop, a cut, and a 27% chance of a further 25 basis point raise. So the probabilities here say we're going to have one more 25 basis point hike, and then we're probably done, at least for June. So again, to answer our question, at least that's one piece of data. Are we one more and done for the Fed? Right now, the FedWatch tool is saying yes. We're going to get a 25 basis point on Wednesday, and then we're going to pause for June at least and see what the data indicates going forward. Again, you can go further out with this tool. So again, we can see even as of July, the expectation of the probability is we'll still be at 5 to 5.25. So again, the probabilities as per the FedWatch tool is that we're one more and done, and we're going to have a pause for at least some significant period of time. And again, that's my opinion. I put my financial advice banner back up. Again, my opinion has been and is that we'll get one more 25 basis point hike this week, and then a pause to wait to see, does inflation continue to come down? Does the unemployment rate continue to go up? How rapid do we descend into a recession? So we'll also look at our other tool. So here's the investing.com Fed Rate Monitor tool. So just another way to view this data, additional data. So again, you see they're pretty well in agreement, 84%. We're going to be between 5 and 5.25. There's 16% say no hike. You see the probability of the 25 has gone down a little bit. It was 89%, now it's 83%. and the probability of a cut has gone up, but I don't agree with that. And again, then you could see June, we're expecting still 64% to be between 5 and 5.25. So again, the Fed rate monitor tool is also saying, we're one more and done. We're going to have 25 basis point in May. And we're going to pause in June. Again, you can see the probabilities, how they're changing. And then in July, we're still between 5 and 5.25. So again, the Fed rate monitor tool is also indicating right now that we're one more and done. We'll get a 25 basis point on Wednesday, and then we'll pause for at least 2 months. That's what the current probabilities are showing. So again, you can monitor those probabilities using these tools. And again, you can find the links and also our videos on how to use them via our notes, and you can always find those links here in the link section of our homepage at beachbumtrading.com. And I'll put that banner up in the banners a sec. Additionally, I added links here to some of our other discussions about how to make money trading around the Fed interest rate decision. So you can hear our previous discussion in a previous weekly trading game plan about how do we trade around this interest rate decision. What are some strategies you can use to make money trading around an Fed interest rate decision? You can also, our previous discussion about the Fed's next move, where we also talked about these tools, and then, don't fight the Fed. So you can, again, hear those discussions. Don't fight the Fed, don't fight the tape, because the Fed's going to win. So, again, we want to see people make money, succeed in your trading. So, again, we hope that all helps. Okay. Additionally, I put some bonus links to some videos that we'll have coming out. We'll talk about this, about trading in May in more detail in an upcoming weekly trading game plan. But I put together some short videos. They're currently still under construction, but you can view those right now about how do the stock markets perform in the month of May and what are the best performing market sectors and industries in the month of May via the links in our notes. Also, we've talked about, we don't think it's prudent to sell in May and go away, and you can hear our reasons why, and we'll be releasing that in more detail via the video that you can access now via the link in our notes. We also talked about and recently released, watch out for the sell in May and go away crowd to start selling early. Well, now we're going to be in May, so if they've done so, they probably already have done so. But again, we could see, a lot of people that follow that adage about sell in May and go away, just kind of sell and leave the market, and then we'll talk about, the summer doldrums, etc. So we've talked about sector rotation for quite a while. You can see our videos on how to play sector rotation. I did want to quickly look at this technology components screener, which we added to our ETF spreadsheet. So again, our all access and VIP Patreons have access to this ETF spreadsheet all the time. And we've added a link to this screener in our ETF spreadsheet. We'll go over the ETFs in here in more detail tomorrow, but I wanted to quickly look at the various subcomponents of the technology industry and see how they're performing. So again, we've got a number of screeners that I've created over the years, and you can use those via the screeners tab in our ETF spreadsheet. So we'll look at the technology components one. Let's see if that'll come up. So here we can see the fangs. See, it's had a pretty major run up. All the mega cap, Microsoft's done very well. Amazon probably dragging it down a little bit. Google is down a little bit, but we see it's approaching this previous high, previous resistance, the lower trend line. This may be interesting. A short on the fangs might be something I might look at in the future. See biotech, Lab U rolled over. Again, TQQQ, again, it's approaching this upper trend line. I would expect it to test that trend line and then possibly get rejected and come back down to that lower trend line. So this is the NASDAQ, the leveraged ETF on the NASDAQ. We see SOXL rolled off, rolled over, had a little bit of a bounce. But again, it's quite a bit below its trend line. It broke down through that trend line. So we might see a little bit of a bounce if AMD happens to come out positive. But again, right now the trend in semiconductors is down. Again, I think that play is pretty much over if you're in SOXS. I don't know if Walter's still in SOXS with some. Hopefully you made a lot of money on that trade. And you might be able to I keep a stop, but you might be able to follow it down further. So I hope that helps. And again, if you want to use this screen or any of the other screeners, you can join our All Access, our Patreon at the All Access or VIP level, and then you can use any of those screeners as well as access our information on ETFs or dividend payers, etc. Anytime. And again, tomorrow we'll go over our dividend payer ETF spreadsheet and also our options ROIC, where we're looking at selling puts on various stocks when an opportunity will sell them when they're going down, buy them back when they're going back up, make additional income again while the market's pretty choppy, range bound until we see a trend. Also piling into dividend payers, generating a recurring income for ourselves using dividend payers. So again, we'll talk about that in more detail tomorrow as well. Congratulations on that with success, Ricky Khan. Glad to hear that. Okay, so if anyone has any further questions, throw them up in the chat. If I missed your question, I apologize, and please put it back up in the chat. Again, you can always post your questions in the comments to this video. You can always ask us questions in our Discord. Just tag us in the Discord, BeachBum Trading. We're ID 7313, accept no imposters. So again, tag us in the Discord. You can contact us via any of our social media sites. Please tag us like in Twitter, etc. Please follow us on Twitter. Again, if you have a question, please tag us in Twitter so that we're notified and can follow up on that. We have a Facebook group. We have a Reddit community. So plenty of opportunities, ways that you can ask us questions. We'll try to respond as soon as we're able. Okay. If there are no further questions right now, thank you again all for joining us in the live chat. Thank you for watching. If you're watching this later on, we greatly appreciate your time and assistance and support. Please share this with other traders, your friends, other traders. We'd really love to grow our BeachBum trading community, get more people in the Discord, get more people in the live chats for everyone's mutual benefit. Again, please share this. Please help us grow the community for the mutual benefit of all of our fellow BeachBum traders. And we hope we'll see you again tomorrow at 10 a.m. Eastern Time for part 2 of our weekly trading game plan, where we'll select our individual stocks, ETFs, etc. for our top swing trading stocks for our watch list, our bullpen, our shopping list, etc. Also, we'll look at the dividend payers that might give us an attractive yield to generate income, and also opportunities to sell puts to, again, generate additional income. So plenty of ways to make money trading, and that's our primary message with our channel. We want to help you succeed in your trading career, see that there's ways to make money trading in any kind of market at any time, and we'll help you try to achieve that. So again, we hope this all helps. We hope we'll see you tomorrow for part 2, and have a great rest of your Saturday.